Hi friends, welcome to Grade B. We are back with yet another important lecture on the Jan current affairs from the month of Jan, part 2. Okay, let's begin. So, first, advance estimate fiscal deficit. Okay, the lever to the look. Who released the first advance estimates? It's NSO. Now, we'll see it on a different parts. So, I have put all the data in this slide so that you can take a screenshot. Every important point regarding to fiscal deficit is covered. Okay, so let's understand. I'll mark only few important points. Like the fiscal deficit could widen to rupees 15.78 trillion from the projected 15.07 trillion. So this was projected uh, uh, in the budget estimate, right? But it can widen to 15.78 trillion, somewhere around 71,000 crore, right? uh, and it could go up to 6.85%. And who is saying this? NSO is saying this. Means we can rely that this is going to come up, right? Then the budget has assumed the growth rate of 14.4%. So this is in actuals, okay? Of over 194.82 trillion of nominal GDP projected by the first advance estimate of 2020-21. Okay, rest everything it is for you to read it out. The important point has been already highlighted. Okay, see, all the data is absolutely not important. Go ahead and read it, at least 3 to 4 times. These are the important points which I have already marked. Let's move forward with the per capita income. Now, what is per capita income? Population divided by sorry uh, GDP divided by population takes the per capita income. So the per capita income is projected to increase from 1.05 lakh in financial year 22 from 1.25 lakh in the financial year 21. Means this is going to be good in terms of per capita income as well, as per the advanced estimate released by the NSO. Okay, in financial year 21, per capita income dropped by 4% to 1.2 lakh from rupees 1.34. So these are very important points. You can get it in MCQ that by how much percentage it has been dropped then. So Indians may see their incomes increased about 12% in financial year 22 from the pre-pandemic period 2019-20 and a 17% increase from financial year 21 if the national income is evenly divided among the country's population. So very important point, and why I am again and again highlighting this is very important. Even if you don't feel this is important, it's up to you, because remember you have descriptive paper, right? And all these points can make your answer stand out from rest, right? So these are very, very important points. Now, let's move forward with the private final consumption expenditure and government final expenditure consumption, right? Now, you see what is the private final expenditure. So this is of 1920s, this gray is of 2021, and this is about advanced estimate. Means this orange line is the data that has recently come up, then comparative, right? So it has declined from 58.6 to 57.5, and it is being declining. Government final consumption expenditure, it has almost at equivalent level, you can say. Then this is gross fixed capital formation. But if you see this data is in bigger in number, which shows that in the economy, the capital has been formed by the government and by the uh, private people as well. And capital expenditure is always good because that creates asset. Okay, that create asset. So if you want to understand how is capital expenditure very important, okay, you go ahead and watch the video called national income in our channel. You will understand that why this is important and how this one creates the uh, creates assets in the economy. Then first advanced estimates. This is for the farm sector. Okay. So agriculture and allied activities are estimated to grow at 3.9% in financial year 22, up from 3.6% in the latest fiscal, according to the first advanced estimate of national income. The gross value added in the agriculture and allied activities in financial year 22 is slightly higher than the long-term average for the sector, which is 3.4%. Right? So these are the important. At current price, it's being said it's not important. Just for reference, you get into the current price. Every time comparative data is important. Then, considering that the farm sector registered a strong growth of 3.6% in the pre-pandemic year 21, and expected growth of 3.9% on top of that also shows the resilience of the sector. So this means that farm sector, even if there is a pandemic, the sector is resilient enough to sustain that and has sailed through the development, which is being clear in the data as well with 3.9%, right? Because in financial year 21 it was 3.6%, and now it is expected that 3.9%. So means this is very good. Now let's move to the next news article, that is gold import. So India spurged a record of 55.7 billion on gold imports in 21, buying more than double the previous year's tonnage as a price drop favored retail buyers and pent-up demand emerged for wedding that were delayed when the pandemic first hit. Okay, then the 2021. So you have to just know about it. So this I don't think an MCQ can be asked with this. But yes, certainly when you write something related to, let's say, uh, balance of payment, this kind of news becomes very important. Balance of payment. Let's say there is a question in the descriptive paper. Okay, uh, state the importance of gold import on balance of payment. Okay, or there can be question like how do you feel, they can ask you your views on the gold import and India's balance of payment. Right? So then this type of questions, I mean this type of data and this type of news article will be much of importance, because this news at one point even to us seems that not important, but when we analyze it critically, we found that this kind of data comes once a year from the government, from the private sectors, okay, and from the different organization. It can come multiple times, but from the government it comes once a year. And since balance of payment you have in your syllabus, which is an important topic, this news becomes very important. The 2021 gold import will easily double the 21 billion spent in 2020 and surpass the previous high set in 2011 of $53.9 billion. In volume terms, India imported 1050 tons of gold in 21, the most in a decade, and far more than 430 tons imported in 2020. Okay, let's move forward. NTPC report. So this is a very important report by the National Thermal Power Corporation. What was the issue? The issue is 5% GST on electricity may cause rupees 5,700 crores loss to state and center. This means electricity is not in the GST regime. So this is a report commissioned by the NTPC, which have suggested about the GST uh, on electricity. So the proposal to bring electricity under the GST regime may cause a financial hole of rupees 5,780 crore to both center and states. In a scenario when all existing electricity duties are also subsumed under the GST, the losses ballooning to rupees 59,000 crore, with the lion's share to be borne by state, that is 57,000 crore. Okay, central government is only sharing a small share, right? And the amount seems small, 5,780 crores for the government of this size, but electricity sector, the discom companies are already stressed. So there are multiple factors for their stress. The every state has some different parameters. In few states it's free up to 200 units. In some states, if a connection is on the name of a female, it's connect completely free. Then in some states it's 50% till 400 units. So, and in some states up to 100 units it's completely free. For 500 units free for farmers. But see, end of the day, this discom companies are buying electricity from thermal power plants like NTPC, okay, Adani, or maybe someone else, okay, Jay Prakash Power. So they're buying from different companies, thermal power companies. But discom companies are not getting enough from the uh, not getting enough support from the state government, you can say, because uh, this has been made an election issue, and that is why discom companies are in loss. And still, over top of it, if electricity comes under GST, the loss would be of very big. The report, however, is based on a 5% GST and partial electricity duties. So now, see, if the government decides that the electricity is being charged at maybe 12% or 18%, then maybe it could be, the loss could be recovered, but the report is based on the calculation done at 5%. Let's move forward with the next news, that is ECLGS stopped loan from slipping into NPA. Very important news. The ECLGS scheme, which has come for a different sector, a different time by in the lockdown or during the pandemic time. Okay, so this has stopped many loans slipping into NPA. So especially ECLGS helped MSME. MSME are the strength and pillars of the Indian economy, right? So this provides jobs to many people in the rural and the semi-urban area. Has prevented 1.3 million MSME accounts from going under, according to a report by State Bank of India. So this is a report by State Bank of India. The scheme has saved around 15 million jobs and stopped 14% of outstanding MSME loans from turning into non-performing assets. Since the launch of this scheme by Finance Minister Nirmala Sitharaman in May 2020, MSME loan accounts worth rupees 1.8 trillion in absolute terms were saved from slipping into NPA. According to SBI analysis, the trading sector, including a small kirana shop, has benefited the most, followed by food processing, textile, and commercial real estate. Amongst these states, Gujarat has been the biggest beneficiary, followed by Maharashtra, Tamil Nadu, and Uttar Pradesh. So this is an MCQ material, right? So you will have to remember this. So more about ECLGS. So I hope till now you had been hearing and you have by heart what ECLGS is. When was it launched? How was it launched? Right? Everything. So these are few important points which you may have missed. This is what we thought, and we bring out to you those only those to provide what is ECLGS about. To provide full guarantee and collateral-free additional credit to MSME, business enterprise, Mudra borrowers, and individual loan for business purpose to the extent of 20% of their credit outstanding as on 29 February 2020. Okay, then 100% guarantee coverage is being provided by the National Credit Guarantee Trustee Company, whereas banks and non-banking financial companies provide loans. Okay, then eligibility. Borrowers with credit outstanding up to rupees 50 crores as on 29 February 2020 and with an annual turnover of rupees 250 crore are eligible under the scheme. Okay, then tenor of loans provided under the scheme is 4 years, including a moratorium of 1 year on principal repayment. So we thought that these are the points that you might have missed, because mostly what we remember is when it was launched, how is it launched, who launched it, where it was launched, what are the sectors covered. So by till now, we believe that you have already by hearted all these points, and these are the few points that you may have missed, and these are very important when it comes to your descriptive as well as MCQ. So tenor of loans provided under the scheme is 4 years, including a moratorium of 1 year on the principal repayment. Interest rate under this scheme are capped at 9.25% for bank and financial institution and 14% for NBFCs. Right? Let's move. So this is a report from MEity report on digital transaction. So the volume of digital transaction rose to 55.54 billion in financial year 2021 from just 10.85 billion in financial year 17. So this is very good in terms of digital India, right? So what are the few other points that report have highlighted? It's Aadhaar provided to over 1.26 billion people till October 21. Okay. Then 53.6 million candidate enrolled, 45.4 trained under the Pradhan Mantri Gramin Digital Saksharta Abhiyan scheme. Okay. Around 3,68,000 candidates have signed up for the Future Skills Prime ecosystem that aims to reskill and upskill 4,12,000 professionals. Trained about 52,000 specialized manpower under the Special Manpower Development Program for chips to system design. Then direct jobs given to 45,500 under the BPO promotion scheme. Then 61 operational software technology parks in India, 53 are in tier 2 and tier 3 cities. Right? So this is a report and only important points and important data is being highlighted. Every piece of information is important. Now, how much you can recall and remember, this is up to you. Anything can be asked in the MCQ and descriptive is, infinity. The more you know, the better your answer will be. Then China's developing status. Okay, so this is a very interesting news article, right? And this is more sort of, in descriptive. Now, what's the issue? Issue is India has questioned China's developing country basis of per capita basis. Now, what is the definition from the World Bank? Let's read this first. According to World Bank, country with per capita income of 4,096 to 12,695 are upper middle income countries. China's per capita income 2021 stood at 10,435. Okay, means China is middle income country. China is middle income country. So India's per capita income is 1928. Belongs to a group of low middle income countries. Okay. So when you compare India and China, you see in terms of per capita income, there is huge difference. And huge means $8,000. Difference is somewhere around $8,000, 7,500 to $8,000. And this is huge. And India has pointed out uh, this point that India is also a developing nation. China is also a developing nation. Now, why? Let us understand why. What happens when a country gets this status like developing nation? Now you read this point. Second point. All WTO agreements contain special provision of developing countries, including longer periods to implement agreements and commitment, handle dispute and implement technical standard. Lately, the US had been demanding that like countries like China and India should voluntarily give up benefits given to developing at the WTO on account of their rapid economic progress. However, both India and China oppose to such move, and that is obvious. Both countries will oppose because when they are getting benefits, why will they revoke that benefit? But India has questions China's based on per capita income because there is a difference of $8,000 between India and China's per capita income. Now, who else have now? What is the India's argument? India's argument is, as per the per capita income level, the Chinese economy belongs to upper middle income. How can China still claim to be a developing country? What are the indicators which China is using to claim such an status? Okay, this is the India's argument. Who else have supported India? Apart from India, Brazil, Indonesia, European Union have also questioned China's developing country status. Replying to EU means European Union, China said that though its economic and social development has made a great progress after decades of reforms, The problem of unbalanced and inadequate development remains, and the contradictions between industrial structure, urban-rural gap, social welfare, and environmental issues are still prominent. So this is what China comments to defend on. Now, with this, we have come to the end of this lecture. We wish you very good luck from Team Grade B. Happy and thank you learning. Happy and thank you and happy learning.